Hey, I'm Ken. Welcome to Stock Market Unfiltered, where we take a candid look / funny at the stock market. Try to be educational and entertaining. And today, I can take a joke now. I got this. Let's see, I don't have to back up probably. I don't know how good you guys can see this or not. Yeah. Yeah, I told you we were doing a video outside and the squirrels came up. So we had this little meeting earlier this week, Monday. And my mom got me that mat. It says, "Welcome to the Squirrel Nut House." This place can get a little squirrely. I can take a joke. Thank you, Mom, for that. She'll be 90 years old in about 6 weeks. So I reckon I'll have to get her a joke for her 90th birthday. But happy Saturday. Welcome to the weekend. We've made it through another week at the stock market. Definitely been turbulent and frenzy, as I said it would. So we'll do a recap today. Some of the things that happened the weekend. Get you prepared for the week coming up. First Republic Bank, headquartered in California. And they operate in 11 states. And I told you this analogy the last time I was on. Yeah, who's going to do this? $50, right? I can't pay this $50 back. I need y'all to help me out. So for that 50, I want y'all to give me 100. And then I'll give you this 50 and I'll keep the 100. Make a nice profit. Well, guess what? Hadn't nobody decided they want to do that. Like I said in the last video, who's going to in their right mind is going to do that? This stock market was up like, this is sometime early Friday, about 10 o'clock, about almost 150, 200 points. And then the FDIC came out with their little Fed review on what happened to Silicon Valley Bank and Signature Bank. And now in First Republic, it's the same thing. But the Silicon Valley Bank Fed review, mismanagement. This is not my opinion. This is from the Fed's review of whatever. I did all kinds of reviews on it and research and investigations and all that. And that's what they concluded. They failed to manage basic interest rates and liquidity risk, which is what I talked about, having treasuries that are 10 years out and they're only earning a 1%. For 10 years and the interest rates are dramatically gone up, or you got mortgage rates that you lend mortgage company, or you lend to the person and they got 3% rate back in the day, a couple of years ago, and it's a 30-year rate. Now the mortgage rates are 5.5% and 6%. They're losing money. And you're not going to, that's mismanagement, just like I said. And it also said the Silicon Valley Bank board failed to oversee senior leadership. Okay. And you go back to that Signature Bank, they said the same thing. It all goes back to mismanagement. And FRC is the same problem, in my opinion. They hadn't actually done official review to say it's mismanagement, but it looks like it is. And I hope you didn't buy that stock and don't buy it. It's going into receivership, in my opinion. It got halted to stop. I think it was Wednesday, I guess, or Wednesday. It got halted 4 times. Yesterday, it got halted during the morning for volatility because it's so far down. It opened the day at $7. Not too long ago, it was $5.70. So it had gone up to $6.59. I don't know why. I don't know why anybody would be buying it. The volume was 176.8 million shares traded yesterday, as in Friday. It was down 43% yesterday to $3.51. And after hours, it's down another 33% to $2.33. So there's very little doubt in my mind this thing is going into receivership. They just can't, they can't get any banks, they can't get nobody to agree on it. So they expect that. I don't think it's going to be a contagion. Not going to spread to other banks. So we should be okay. And thanks to Microsoft and Meta this week, nice run in the S&P 500. So things were good. I was disappointed in Amazon, though. It's funny. One sentence, just one sentence, sent that stock down. Let's see, it was $109. Then when they made their earnings announcement, they blew the earnings away. Their revenue was $127.47 billion versus $124.5. Earnings per share, 31 cents. AWS, which is Amazon Web Services, $21.22 billion. Advertising revenue, $9.09 billion. And the stock went from when it closed that Thursday during the day, during the after hours, it went all the way up to $122. That was great. That's like a $13 gain. And then I saw it going down. So why is it going down? And I found out why it went down. One sentence on the earnings call said their Cloud 9 revenue, or should I call it their cloud computing division, they're seeing slower profits or slowing profits. That one sentence sent the stock down from 122 all the way down to yesterday when it closed at somewhere around $105 on that one sentence. Amazing to me. They still have growth. I mean, they beat the growth estimates on it. It grew, their AWS grew 16%, which was more than what they expected. But the growth was 37% in the same quarter last year at this time. But that seems logical to me that it might well be down because you got Google and Microsoft, who they're in competition with this Cloud 9 and AI and storage and computer division, all that, along with Amazon. So they still beat it. They took the stock down. It's all right. It's a buying opportunity. I think in just a matter of time when they figure this out, it is not that big of a deal. I would expect it to slow, but they blew numbers away on everything. It's actually just looking at it right now, when after hours was up yesterday evening, it closed at $105. So about where it started at a couple of days ago. But that's Amazon. Quick up on their earnings, and I think it'll go up, but the price to earnings ratio is 264. Ooh. I wouldn't buy that stock, but that's for you younger guys who watch the channel who want to buy. That's fine. You can buy some, and it'll probably do well over the years. But for me, it doesn't pay a dividend. So I do have some disclosure in another account. That's a speculative account that I talked about. If I see it go up, I'm just going to sell it and move the money somewhere and do something else. But that was just, I always have, don't ever put all your money in a stock or this or that. It's okay to have speculative trading. Nothing wrong with that. Kind of like what the memes did yesterday with, you've heard of meme stocks. Here's one for you. Top Financial Group Limited, somewhere in Hong Kong. Their stock was plus 441% yesterday into $108.21. And then after hours, it lost 50%. It's down to $59. The ticker symbol is TOP. That's some kind of, I don't know. At one point, it was up 1,600%. A meme stock. Don't buy that either, unless you want to lose some money. You might get lucky and make money. I don't know. But the other companies did really well. I mean, Amazon still had good earnings. So I guess it was a 4 for 4 really on Amazon on the beats last week with Google and Microsoft, Meta, and Amazon. Although Amazon performed the worst out of all the four of them because of that one sentence about Cloud 9 computing division slowing, although they beat the estimates. Go figure. No, I don't know. So the S&P 500 was up for the month, along with the Dow and the NASDAQ. But on these updates, don't get complacent now. I found an interesting thing that I was looking through today before I came on. There's 5 stocks, S&P 500, Apple, Microsoft, Meta, Amazon, and Nvidia. This is 60% of the S&P 500 gains. We're talking about gains in the S&P 500. All these 5 stocks are in the S&P 500. 60% of the S&P 500 gains this year are from those 5 companies. It's hard to imagine, ain't it, if you think about it. You got 5. That's why I told you that we talked about this with the earnings next week about the $1 trillion company, $1 billion company's market cap, 1.1 trillion, and somewhere 2.2 trillion or something like that. Those are some of these stocks, and I told you they can move the market. And this is proof right here that 60% of the S&P 500 gains were because of these 5 stocks: Apple, Microsoft, Meta, Amazon, and Nvidia. So you do have to be careful. Don't get complacent and have an April Fool's joke played on you. Market looks good, but when you look at that and see that 5 stocks account for 60% of the gains, that's for this year. S&P 500 is up 8.59% for the year. So be careful. I got my dad one time on April Fool's joke. This was back in the 70s. That's how old I am. We lived in this neighborhood, and the driveway had a steep hill. And Dad's car sometimes would just roll backwards, and right at the end of the driveway, go all the way across the street and hit a tree. I got him on April Fool's joke one day. I said, "Dad, your car's over there in the neighbor's yard." He went running out, thinking his car was going to be on the other side of the road and hit a tree. Not. He got fooled. And I just sat there and laughed. His face turned red. It was April Fool's joke. He can't say I lied. It was April Fool's. What could he do? Suck it up. Kind of like squirrel house Mom gave me. This house gets a little squirrely sometimes. So don't be fooled by everybody saying that market's up. S&P 500 is up for the year and month and everything else. So remember, 60% of the gains so far this year are from those 5 companies. So don't get complacent. It's a stock picker's market. So I'm not going to try to be on too long. But Apple reports earnings this week or next week, because it's still Saturday. It's the weekend on Thursday, I believe, after they close. So I'm looking for some stocks to buy this week. We'll see. What I'm looking at, y'all probably may think I'm crazy, but it's called Caterpillar. It's ticker symbol CAT. Price to earnings ratio is only 15.8. Their quarterly dividend is $1.20 a share, and that's a 2.24% yield, which is a little low for me. But it's got 1, 2, 3 buys on it, 2 holds, and an underweight from the analysts. And I'm thinking this stock here, because the government passed this IRA, the Inflation Reduction Act, which doesn't seem to have worked yet because inflation keeps going up. But this is money set aside to help infrastructure, like build roads, and this is going to take 4 or 5 years. That's a lot of money. And who stands to benefit from road construction? Caterpillar. It's up a little high, in my opinion, right now. It was up $4.47 yesterday to $218.80. After hours, $218.90. 52-week range is 160.6, and the 52-week high is 266.4. So I'm taking a look at it. I haven't bought it yet. We'll see how it goes. And 3M still doing okay. Like I said, if you can stomach the lawsuits or the litigation that's against it with the chemicals in the water and the subsidiary that actually filed for bankruptcy that made them defective earplugs. But it was last time we talked around 105, now it's 106.22. So keep an eye on that. Its price to earnings is 10.9. It pays $1.50 a share in dividend, and that's 5.7%. So that's pretty decent. Then the last thing I'll talk about is Pioneer Energy. The one I told you was a little disappointed. And I finally dug through it and figured out why it was down. It was, they had a new, the current CEO is retiring. They got a new CEO coming in at the end of the year. And the talk was amongst people that like to buy shares, hedge fund managers, there was still hope that Exxon, which still, as I said, is a rumor, was going to buy Pioneer Natural Resources out. Well, when they figured out that if their current CEO is retiring and they got somebody else to replace him, they figured out, oh, that's probably, nobody's going to buy this company because they're putting in a new CEO. Ding, ding. And then the next one that they said was the variable dividend. You know, I told you it was a little bit less this time, and I found out why. I had 100% that they give out in dividends, variable dividends, because you know, this is a perfect company to be in for a shareholder. They love to give money back. Out of that 100%, they normally allot toward a dividend. They're taking 25% of that away, and they're going to use it for capital investment and to buy back stock. So anytime a company's buying back stock, that's good. But they didn't like that. And I was deciphering for that. So that's not that big of a deal. Remember, they beat on their earnings. He said by 25 cents. Some other ones say 30 cents. It depends on what number you want to look at. It was a great quarter, as far as I was concerned. So finally, they figured that it wasn't all that bad, I guess. And yesterday, at one time, it had gone up all the way back up to 220. And because the previous close on Thursday was $212. That's a big drop. A $7 or $8 drop after their earnings. But then they wised up yesterday. And the stock, like I said, was up $4.74 to $217.55. And then after hours, it's $218.80, $1.25 up. So stay the course. And as I said before, I think the stock can go to $280. And I've seen numerous price targets from between $280 and $380. So I'm not worried about this stock. It's just because the CEO changed and they cut the dividend back a little bit on the variable rate. It's still $4.59. And they're going to buy back some shares. Sounds great to me. I don't have a problem with that. Not one bit. So, that's my take on the stock market. That's our weekly recap that we try to do on Saturdays or Sundays or Friday night, whenever I feel like doing it, I reckon. I don't know. But hope you guys have a great weekend. And we'll see you next week.